Thank you for tuning in to another edition of the Vulcan Report. As you already know, they're already beginning to talk positive about saying that a deal has been reached when officially it has not been reached. Basically what we're seeing is a replay of 2008 all over again. You cannot trust anything that comes out of their mouths on Capitol Hill until you have an official, signed in ink, agreed to deal. So expect huge volatility in the markets, expect crashes and rallies, and just about anything is fair game. Wide ranges, huge volatility will be on the table until everything is resolved. It looks like we're not going to have a deal until probably midnight Tuesday, something crazy like that. They like to play with people's emotions and try to sell you a bill of goods. And then they push the thing along without anyone really even reading and knowing what it is that they're signing and agreeing to. That's just the politics of Washington and how they work. But in the meantime, what you need to do, and always do, regardless of any fundamentals, is follow the price action. Price action tells you everything you need to know. As far as the markets are concerned, we did have a gap up on the open in the futures. Now, as I do this video, the futures markets are coming back down, trying to fill those gaps. Basically, it doesn't matter what they do. Eventually, the markets are going to take their course and do what they will do. Markets can maintain their irrational, stance longer than you can remain solvent. So, regardless of a bill or not, the economy, for the most part, is doomed anyway. But that doesn't mean that the markets will crash because of that. Markets could go to extreme highs, and we could see new all-time highs in all the major stock indexes, even though it doesn't make any sense. Believe it or not, that's just how it is. So always expect the unexpected. Most people are expecting a major crash regardless, and we may have one. Then again, we may not. Right now, the U.S. dollar index is also crashing. The dollar is being heavily devalued. We broke that 73 handle, and we're on our way to going to 72. And once we break that, it's game over. The U.S. dollar will officially lose its reserve currency status, and you'll see people piling into other things, most likely the metals. But then again, you can't really expect that either, because normal, market fundamentals and analysis are being thrown out the window. Gold and silver prices are being kept at bay. Every time they break out, they get beat back down again. As I'm doing this video, the December gold futures are down over $12, and silver's down 80 cents. Man, huge, huge. So not only do you have gold and silver crashing, but you also have the U.S. dollar index crashing. And the euro, believe it or not, is also off. On the Forex side, we're off. We're off right now. Yeah, we're about even right now at 0, but still negative momentum. The euro futures, though, the FX micro euro futures is showing a positive of up 31 cents. But regardless of how you play it, things aren't making sense. As far as the bonds, and you're hearing a lot of the talking heads talking about people are flying over into the U.S. Treasuries, that's not true. Ben Bernanke and the U.S. Fed are the only one that are buying U.S. Treasuries. All right, don't get it twisted. When the head of PIMCO, the world's largest bond trader on the planet, says they're selling the U.S. bonds, you better believe it. All right. So if there's an old saying, when you see the professionals and people doing something, what should you be doing? Okay? Insiders, when they do things, it means that they know what's about to go down. So you want to play in the direction of the price action. Okay? Price action tells the whole story. As we are doing this video and talking right now, taking a look at what bonds are actually doing, we're maintaining. We're doing pretty much absolutely nothing. Nothing is happening right now. We're at the 125 handle. So you're seeing the yields being kept at bay as the bond prices continue to go up. So basically, what they're doing is they're trying to stave off, erratic movement, and they're trying to keep things stabilized. But you can tell that we're losing that battle. It's only made to look like certain things are happening, but they really aren't. Now, I will prove it to you with today's analysis. Let's just take a look at a few of the equities. We're going to look at some of the ETFs, the ones that track the commodity futures and things like that, and the stock indexes. But first, let me just pull up the S&P 500, the ticker symbol SPY. Because again, like I always say, price action tells the entire story and what you need to know. All right, as you will see, momentum has been down. We're in a downtrend channel, okay? And on the SPY, we are right here below the Kumo cloud. Price action went below the Kumo cloud. All right, so we're starting the beginning of a bearish tone. So we expect sideways to lower prices in the S&P 500, just based on looking at the chart patterns. All right, we have a swing VIX reading of -13. All right, and we're showing bearish momentum, and we have a Kumo breakdown, a breakdown below the Kumo cloud. That is bearish. All right, regardless of what they say. All right, we have negative momentum. Taking a look at the weekly price projections, we have the intraday resistance at 130.68. So the system will look to get long there. We have intraday support at 127.84, and the system will look to go short there. Based on today's overall market movement and sentiment, the system, instead of going long at the 130.68, is actually looking to go short at 127.84. Looking at our weekly pulse wave, we have on the top side we have 134.82, and on the bottom we have 129.63. As for volatility, the SPY closed above the lower band by 1.3%, so we expect a short-term pullback inside the band will be likely, and then prices will have a good chance of continuing along those lines. So that's what we're looking at in the SPY. All right, taking a look at silver now, ticker symbol SLV. As you can see, we're inside of the major Kumo cloud. All right, this is the Kumo cloud of death. We're still in that cloud. You cannot trust the price action in the cloud until we close above or below the cloud. All right, right now we are still trendless. All right, you do not trust this price action. Okay, it's not there. We're still in bearish territory with silver. Okay, we need to get above the cloud to resume the long-term bullish trend. If we break below the cloud, then you see sideways lower prices. How do you know that? Again, look, sideways and lower prices. Here we are. We went lower, moved sideways a little bit, lower, sideways a little bit, lower. Then we finally retraced back up, but we're not out of the cloud. So technically speaking, we're bumping against resistance up here around that $40 handle, and then we're starting to come back down again. And like I said, the futures are already down. So we expect SLV to open lower today and continue to trade lower. And we do have 3 of these big red candles in a row, and that's extremely bearish. Okay, we have a swing VIX reading of positive 34 as it's coming off of this overbought level here. We're at plus 40. Taking a look at the Kumo cloud situation, we need to close above $40.16 or a close below 35.16 to have a direction again. Right now we don't have one. Our intraday price projections, we have support at 38.64, and we do expect that to be violated and taken out, and we expect the market to actually close below the 38.64. Resistance is at 39.46. So any kind of rally would look, we expect it to be met with heavy selling. Weekly pulse wave is at 40.35. The system would start looking to get long there. And support in the pulse wave is at 37.23, where the system will look to get short. But as of right now, the system is not looking to take positions at any one of those price points. The system is on the sidelines until we establish something out of the cloud. All right, taking a look at Paulson's Gold. I say Paulson's Gold because that dude Hank Paulson is the #1 holder of the gold ETF GLD. It's the ticker symbol. All right, you see how we've been very bullish and how we're hitting some resistance areas here in the gold. Okay, we do have a confirmed pulse wave to the top side on that. So the system would look to continue to buy goals on the breakout. But let's look at some of the technicals so you can get a full picture. All right, we have like I told you, the futures were already down, so we do expect this market to gap down on the open and continue to trend lower. But we do have a rising window, and that's where the top of the previous shadow is below the bottom of the current shadow. This usually implies a continuation of a bullish trend. And there have been 9 rising windows in the last 50 trading sessions, and this makes the current rising window even more bullish. Okay, we also have a spinning top. All right, and that's a spinning top is a candle with a small real body, and spinning tops identify a session in which there is little price action, as defined by the difference between the open and the close. And during a rally or near new highs, a spinning top can be a sign that prices are losing momentum and the bulls may be in trouble. We have a swing VIX reading of 40.55. That is overbought, so we expect the gold market to correct. Okay. Let's see here. We also have this a situation where gold's price has reached a new 14-period high, while the swing VIX has not, and this is a bearish divergence. And since the post-scan swing VIX leads the market 3 to 5 days out, we're waiting to see if downward pressure develops, which we expect it will because futures are down. And since the last swing VIX signal, GLD's price has increased only 0.70%, and has ranged from a high of 159.25 to a low of 156.11. In addition to that, we do have still very bullish trend, and gold is still under heavy accumulation, and we do have bullish momentum to match it. All right. As far as intraday price projections, we have resistance at 159.33 and support at 157.60. System looks to get long at the 159.33 level, and you're looking to place your stop at the 157.60 level. But we do expect the gap down lower in the open, so we see the 157.60. We expect that to be violated, and for gold to close well below that by the end of the day. As far as pulse waves, we have the 156.58 was the last pulse wave buy where the system was long. So the system would be looking to move stops and take profit if stopped out. And that would be at the 157.60 level. All right. So the system would probably be stopped out on the open on the GLD today. Pulse wave support is at 154.10. All right. So basically, if we close below that, system looking to get short at the 154.10 level. Now, overall, in the long term, the 12 to 18 month price projection for GLD is well over $205. All right. Looking at volatility, we closed below the upper band by 19.5%. So because we're overbought now, we do expect a short-term pullback inside of the volatility bands, and then the upward trend to continue. All right. So that's all we have to take a look at now. If you want to take a look at further analysis, just go to the blog at polscan.blogspot.com, and there'll be a lot more securities listed there today, shortly after I finish this video. So remember, take what you can and give nothing back.